Hello, everyone. Good evening. This is Samir Sohani. I am currently working as a research associate in the Bangladesh Rating Agency Limited, a subsidiary of Dun & Bradstreet South Asia Middle East Limited. So those who do not know, every month BDRL arranges a webinar addressing contemporary economic issues, and this month isn't any different. This month we chose a very significant topic for the banking industry and economy as well. So our topic of today's webinar is Digital Bank, a vehicle of inclusive economic development. So as like our previous sessions, previous programs, we have some very distinguished panelists, and I would like to have the honor to introduce them to all of you. I would like to take the privilege to introduce Mr. Mohammad Aminul Haq. He is the Executive Director of Nogod Limited. Sir is an operational management consulting professional with over 11 years of international business experience. He has worked in several industries such as financial sector, oil and gas, mining and logistics, and electronic manufacturing sector. Not only that, he has successfully applied his management expertise to different areas of operations throughout the value chain, including working with global companies like Shell, British Petroleum, Standard Chartered Bank, etc. So welcome to our webinar, Aminul Haq, sir.
Thank you. Thank you very much.
Okay, so I would like to take the honor to introduce our next panelist, Mr. Mohammad Masoom. He is the Managing Director and Chief Executive Officer of Citizen Bank Limited, Private Limited. So Mohammad Masoom got over 3 decades of hands-on experience in banking sector, and he served the country's leading banks and financial institutions in important positions. He has his credit extensive experience and exposure in different core risk areas of bank management, having good reputation and professional acumen, strategic bent of mind. So unfortunately, he couldn't join us on time, but yes, he will. We are very positive about that. So let's move on. We have our keynote speaker, Mr. Moinuddin Ahmed. He is the Assistant Vice President and Head of Corporate Credit Rating in BDRL. Moinuddin Ahmed has completed his BBA and MBA in accounting, and he has he's a keen finance professional with more than 11 years of experience in credit rating sector and more than 6 years of experience in other sectors. He has rated different clients from various sectors like banks, insurance, pharmaceuticals, real estate, and so on. So yes, I would like to welcome our keynote speaker too. Okay, so last but not the least, we have our moderator, our honorable CEO, sir, Dr. Said Abdullah Al Mamun, FCMA CSRS. Mamun sir is not only the Chief Executive Officer of BDRL, he is also an independent director and chairman of Audit and Finance Committee Board of Directors, Northwest Power Generation Company Limited. He has Power Generation Company Limited. He has earned his PhD in finance from School of Management, Asian Institute of Technology, Thailand. He has completed his BBA and MBA from Department of Accounting Information System of University of Dhaka. And he is also a certified professional cost management accountant and a fellow member of Institute of Cost Management Accountants of Bangladesh, and also an independent director of FAS Finance and Investment Limited. So Before handing over to Dr. Mamoon, I would like to add that we are going to have a question and answer session at the end of this program. So to all the audience, feel free to ask any question to our panelists, to the moderator, to our keynote speaker. Please do ask questions. So that's all from me. I would like to request Dr. Mamoon to take over the floor.
Thank you, Samira. Thank you for your very humble introduction, and welcome all of you on behalf of the BDRL on the monthly webinar. We try to organize the regular discussion on the contemporary business and economic issues. So in that line, this is one of such initiatives. And today's issues is the digital bank. As we all know, the transformation in every aspect due to the continuous and fast innovation of the technology and its use in every sphere of our life. So in this respect, I'd like to take the privilege to introduce our organization. Is it visible, my slide?
Yes, sir.
Okay. So today we have taken such a topic which is relevant from multiple perspectives. That is digital bank, and Bangladesh is emerging with one of the largest and hugely populated country. So along with the economic development, one of the major challenges of the inclusive development or the balanced development. So today our exclusive focus is that how the concept of digital bank can be a vehicle for the inclusive development of Bangladesh, through which the non-bankable, unbankable people can be incorporated in the mainstream banking services, as well as in the economic activities. So the Bangladesh Rating Agency is a subsidiary of a global company, that's Dun & Bradstreet, South Asia Middle East Limited. It is incorporated in Bangladesh 2008 and received license from the Bangladesh Securities and Exchange Commission, and also accredited as a ICAI from the Central Bank of Bangladesh, that is the Bangladesh Bank. And we have already completed more than around 40,000 SME rating and more than 300 corporate ratings. And this is the other shareholder of the BDRL. We have very distinguished and reputed financial institutions are the initiators of this initiative. And this is our parent company. This is the almost 200 years old company. There's a Dun & Bradstreet, and it's listed in the New York Stock Exchange. And almost 500 million business record at this moment of the Dun & Bradstreet. And almost 90% of the Fortune 500 company rely on the DNB data. And it has a very glorious legacy, having our first colleagues, there are 4 ex-US presidents who were also the employee of the Dun & Bradstreet. So it is always helping the company to grow and to sustain their performance across the world. Dun & Bradstreet around the world works through the 200+ offices. And Dun & Bradstreet South Asia Middle East has the operation in the South Asia, Middle East and Africa with 67 markets, with a wider range of services, including risk management, rating agency, credit bureau solutions, sales marketing, economic analysis, research and advisory services, and financial technology solution. And BDRL exclusively focuses on credit rating primarily, and it provides the multiple ranges of the credit rating for the SME, for the corporate, banks, financial institution, bonds, and other instruments, as well as public and private enterprises. We have very robust methodology and highly skilled human resources. And our research team is well equipped as well. And advisory services comprises, we continuously track the economic movement of region, global, as well as Bangladesh. And we do also in-depth industry analysis. We are always ready to help our clients through our due diligence services and management advisory services for solving their business problem. And one of the flagship program and services we provide, that is the ESG advisory services for improving their sustainable indicators and practices. And we have few publications as well, like we do the SME Bangladesh series, we have publication, we do monthly business bulletin, and we also discloses different economic outlook of Bangladesh as well. And we also try to add value to the corporate and the industry through our sharing our knowledge and the different elements, including financial statement analysis, credit rating framework, risk management, business and strategy analysis, and the financial planning. These are the few focused area where we have the expertise and we share our understanding with the industry and the professionals. So exclusiveness of our credit rating report is that we try to provide independent opinion, and we try to be very focused to give the in-depth insights so that it can be helpful for their strategy formulation, as well as try to build their strength to sustain their business. As a result, we are talking that there are 5 key uniqueness of our report, that this is independent opinion and rating analysis by internationally trained analysts. Most of the analysts are trained internationally, continuous basis, and insights for financial strategy. We always help. Our report, in fact, helps all the ingredients they require for their financial strategy formulation, as well as the business strategy formulation as well. And it provides the inputs for business decision making. And business strategy analysis, we also review the strategy of the business, because that ultimately affects the debt repayment capability of the company as well. And the uniqueness of the BDRL is a subsidiary of the global company, which is surviving with its dominant performance for the last 200 years, and highly qualified human resources, and robust credit rating methodology, and continuous research on economic and business, and the countrywide business network. We can provide the services to our clients with our network as well. And we try to derive the truth from the data, being an unbiased and independent analyst. And we always have the effort to build the better insights so that it helps the clients for taking their better decision. And our bottom line is that we want to provide the credible credit rating, which is essential or like precondition for sustainable business and economic growth of our client, as well as economy as a whole. And like previous months, in these months, this is also our privilege to talk about and to create a platform of discussion on the digital banking, a vehicle of the inclusive economic growth. And today we are very delighted to have our like guest panelist is Mohammad Aminul Haq. He has been introduced, but in spite of that, one of the features I want to add, he is working in such an organization which is not only providing services but also creating huge impact in the life of the marginal people. So again, welcome Mohammad Aminul Haq.
Sir, if I may interrupt, Himadri
Yeah.
sir has joined our program.
Okay, thank you.
Hi, Dr. Mamun. Hi, everyone.
Hi, Himadri.
Please continue.
Okay. Yeah. So at this stage, like before going to Mr. Aminul Haq, so Himadri, may I request you to add few words for audience and for all of us?
Yes, no, I'm very excited to be.
Okay, before that, just
participating.
1 minute, Himadri. So let me introduce Himadri is the Chief Strategy Officer of the Dun & Bradstreet South Asia Middle East, and he has a wide range of the global service providing experiences. We are always proud to work under his leadership. So Himadri, please.
Thank you, Dr. Mamun. That's very kind. No, I'm very excited about this webinar. Thank you for organizing this. I think the topic is very interesting. And I would especially like to thank our guests who have taken out their valuable time to participate in this webinar. So welcome and thank you very much.
Okay, thank you, Himadri. So at this stage, may I request Mr. Moinuddin Ahmed for present the concept paper.
Yes, sir. I am ready to prepare the concept paper. Am I audible, sir?
Yes, you're audible and we can see
Yeah,
your.
we can listen you. Yeah, and continue.
Okay, sir. Okay, sir. Let's introduce myself. I'm Moinuddin Ahmed, Assistant Vice President and Head of Corporate Trading, BDRL. Thank you, sir, for giving a chance to deliver my presentation on digital bank, a vehicle of inclusive economic development. At first, I want to describe about Bangladesh. Bangladesh is strategically located river delta and the gateway for South and Southeast Asia has been growing at a staggering rate of around 7% per year during pre-COVID era. Despite hard loss of poverty, natural calamities, and resource limitations, the country sustained its impressive economic growth, reflected by a 7.25% GDP growth last year. Presently, inflation rate is around 8.57% and found stable in last 6 months. National budget of Bangladesh stood at 6,780.64 billion in 2022-23. National debt to GDP ratio increased 34% in 2022 from 29% in 2027. Financial market overview. Presently, the country has 43 commercial banks, 6 state-owned commercial banks, 599 MFIs, 3 specialized banks, 9 foreign commercial banks, and 35 non-bank financial institution. Compared to where the country started her journey with 6 nationalized commercial banks, 3 state-owned specialized banks, and 9 foreign banks. This status is obviously a tremendous achievement for the nation. The larger are the reach these financial institutions is greater in the financial inclusion. Financial inclusion. Financial inclusion has 3 major dimensions. They are access, uses, and barriers. The access dimension includes issues such as number of branches, banking agents, number of ATMs, POS. Uses indicates towards aspects such as number of deposit accounts or loans, number of depositors or borrowers, percentage of adult with account at a formal financial institution, percentage of products that correspond to banks and other financial institutions, and percentage of adult with at least one financial product, etc. Barriers includes aspects such as outreach, regulation, business model, service providers, bank charge, required number of documents, etc. It is easily understandable that digital banks will positively enhance access, like increasing digital presence at the hands of all, increased number of agents in remote locations, easier cash out and cash in opportunities at ATMs, and so on. Increase uses by increasing the possibilities to use more banking products such as saving deposit, loans, credit cards, online purchase, etc. And reduce barriers by offering services at a lower cost due to lower establishment and operating cost of the financial institution, less hassles and paperless transaction, and greater outreach. State of the access of banking service. Despite the improvements in the country advancement in economic and financial dimensions, only 52.8% people have financial services accounts, 29% possess mobile financial service accounts, and only 37.7% of the people have bank accounts. Data from World Bank further suggests that around 3 crore people of the country are still unbanked. Furthermore, according to Bangladesh Bank, the number of bank branches in Bangladesh increased to 9,270 in 2022 from 8,181 in 2015. In addition, the number of mobile financial services users in the country has been rapidly increasing, with more than 100 million registered MFS accounts as of June 2021. It is, however, necessary to remember that establishment of fully digital banks will call for new set of regulation, intensify safety practice, challenges in the interoperability of the service providers, and require much level hands-on training, significant awareness building initiatives in the remote location of the country. What is digital bank? A user can utilize digital banking to make financial transactions over the internet. Digital services. Digital services are of a digital bank, mainly mobile financial service, agent banking, internet banking, cash recycling machine, eKYC. Best online banks. Top online banks are situated in United States of America. These are Quantic Banks, Discover Bank, Axos Bank, LA Bank, NBKC Bank, TIAA Bank, Vio Bank. Beside this, other banks are in China, WeBank, MyBank, Sunning Bank. In Singapore, Mari Bank and Annexed Bank, Greenlink Digital Bank. Digital disruption caused by digital bank, the case of China. China demonstrated the large effect fintech and especially big tech firms can have on the banking sector. Its mobile-based connectivity ecosystem, along with scarcity of consumer-targeted bank offering and the innovation-friendly regulatory framework, has allowed large tech companies to seize large market share. P2P lending and mobile payment are well developed in China. Big tech firms' financial activities include mobile payments for consumer goods. Such payments have become increasingly popular and now constitute 16% of China's GDP. In 2003 and 2004, Alibaba, China's most prominent online commerce company, took advantage of the developed payment system by introducing Alipay as a third-party online payment platform. Alipay, as part of Ant Financial, has been instrumental in Alibaba's success. It now offers payment, wealth management, lending, insurance, credit scoring services, has more than 520 million users and manages money at the same level as China Big Four traditional lenders. The platform has managed to cover more than 50% of the US GDP. 50% of the USD 5.5 trillion Chinese mobile payment sector. Its only major competitor is the tech giant Tencent, which owns the dominant messaging and social network app WeChat. And two firms account for 94% of the market. WeChat is used to make payments both online and physical stores and to settle utility bills. The total value of e-money transaction in China exceeds that of Visa and MasterCard combined worldwide. The Ant Financial online money market found Yubao, the largest money market fund in the world, commanded USD 200 billion in assets as of September 2018. Ant Financial is also a key provider of insurance service, holding a majority stake of Cathay Insurance China and founding stake in Zhong'an Insurance, China's first online company insurance firm with 535 million insured customers. China is the largest market for fintech credit with 2,525 fintech credit platforms by the end of June 2017, and fintech credit volumes have been steadily growing, with cumulative lending reaching CNY 1.359 trillion, USD 215 billion in the first half of 2017. Thus, search engine Baidu has also moved into banking and financial services. Overall, smartphones have evolved into a major platform for the provisions of alternate service in China. Single platforms integrate online shopping with mobile phone wallet and money transfer capabilities. However, the chances of the regulators' crackdown on individual firms can never be forecasted. An alleged crackdown on the Ant Group has also been found in 2020, soon after a public speech by founder Jack Ma criticizing the Chinese state heavy hand in business regulation in China. Its planned IPO, expected to be largest in the history, was quashed by state order. Had it gone public, Ant Group would have valued at more than $300 billion, more than, and a part of the state's crackdown on tech giants. The state regulatory agencies also fined Ma for following unfair monopolistic market practices. In a series of events after this, a segment of group has now entered into partnership with Chinese government. The case of Ant Group teaches the following things. Online banks and financial services are disrupting the entire financial sector landscape. Regulatory interventions are becoming easier on these firms due to lack of direct brand competition. Traditional banks, non-bank financials, and service firms such as insurance, banks, third-party platform offers, even OTT, are also likely to be big indirect competition. These online bank financial services platforms. The presence and growth of these organizations are likely to create what Joseph calls creative disruption and new poses as well as solution to be rolled out, either through or without intervention from the online banks and financial services platforms. Benefits of digital bank. First benefits of the digital banks is convenience, ability to access accounts from particularly anywhere. That means check your balances, pay bills, or transfer money between accounts. Secondly, depositing checks remotely and set up notifications or alerts without visiting a branch. If debit card is lost or stolen, by logging into mobile app, the card can be deactivated. While online banks may lack branches, many of them offer ATM access. Added feature offers features such as goal trackers, automated saving, financial calculators, budgeting tools, person-to-person payments, integration with mobile wallet app. Cost of digital banks. Many of the best banks online charge no fees for monthly maintenance, minimum balance, person-to-person transfer, incoming wire transfer, foreign transaction, overdraft, ATM services. Record keeping. Online banking simplifies the task PF tracking expenses and budgets by letting one review credit and debit transaction at a glance. A person can easily filter account details to look for a specific transaction or review purchase made over a certain period. Others, it is easy to open accounts without going to a branch. Automatic bills payments save you time and postage. There are no need to wait in line for a teller. You can pay bills with no fees. Automatic savings deposits can grow your money faster. online banking can integrate with budgeting apps. You can monitor your account for fraud from anywhere. Why digital bank is preferable? Number one, fees. Going for free or least fee charging banks. APYs, going for banks with competitive APYs. Minimums, going for bank, those impose minimum possible balance maintenance requirement. Products, choosing the banks that fulfills the need of its client with available products. ATM network, going for the bank with the best possible ATM network. Customer experience, going for banks, those offer easily accessible customer service facilities. Digital banking experience, the best online banks provide a simple online interface and highly rated mobile apps for banking. And safety, going for banks with a deposit insurance from regulators. Challenges of digital banks. Number one challenges are creating sufficient awareness about the whole range of products and service. Safety is another concern. Data shows that mobile browsers and apps account for 71% of the fraudulent bank transactions. Weak password, using unsecured networks, online attacks, login credential theft, and phishing are some of the major concerns. System down can be a challenge. Data shows that downtime can cost business $1.5 million every year. Lack of personal relationship is a concern. Continuously changing digital transformation poses competition to both traditional and other online banks. Challenges in Bangladesh context. Digital vulnerability, submission of required documents, verification requirements, delivery of services at the doorsteps of the people, interoperability of concerns, adopting technological advancements throughout supply chain. Some instance of failure of online banking. Ulster Bank, a subsidiary of Royal Bank of Scotland, experienced a major technical failure in its online banking system. The failure lasted for several weeks and resulted in customers being unable to access their accounts and make transactions. In 2018, TSB Bank UK attempts to migrate its banking system to a new IT platform. The migration was failure and caused disruption to online banking services for over a week. Customers were unable to access their accounts and could access their accounts. BBVA Compass. In 2018, BBVA Compass, a US-based bank, experienced a major online banking outage that lasted for several hours. Customers were unable to access their accounts or make transactions during this time. In 2020, Banco Standard, a Spanish bank, experienced a major technical failure that affected its online banking services. Customers were unable to access their accounts or make transactions.
Moin bhai, please, do you unmute?
Sorry, sir, there is something, I think, sir, a mistake. Wait for 1 second, sir.
Yeah, we can see your screen. Yeah.
Okay, sir. Okay, sir. It's okay. How digital bank improve financial inclusion in Bangladesh? Bangladesh has a large rural population, many of whom face significant barriers to accessing formal banking services. However, the widespread adoption of fully online banking has the potential to help rural poor in Bangladesh to overcome some of these barriers and improve their access to financial services, thereby promoting financial inclusion. One of the primary benefits of fully online banking is that it enables individuals to conduct financial transactions without the need of the physical bank branches, which can be a significant barrier for those living in remote areas. This is particularly important in Bangladesh, where many rural areas lack access to physical banking services. With online banking, individuals can access a range of financial services such as savings accounts, loans from their homes or mobile device without having to travel long distance. Another important benefit of online banking is that it can be more cost effective than traditional banking service. Online transactions can be conducted at a lower cost, reducing the financial burden on individuals who may not have the means to travel to physical bank branches or pay high transaction fees. In addition to the accessibility and cost effectiveness of online banking, it can also play a crucial role in promoting financial literacy through online banking. Individuals can gain access to financial education and resources such as online tutorials, financial planning tools. This can help rural poor in Bangladesh to improve their financial management skills, build savings, and access credit, which can be crucial for improving the financial stability. Overall, adoption of fully online banking or digital banking has the potential to greatly enhance financial inclusion in Bangladesh, particularly for rural poor who may face significant barriers in accessing formal banking service. By improving access to financial services, reducing transaction costs, and promoting financial literacy, digital banking can help empower rural poor in Bangladesh to take control of their financial lives and improve their economic prospects. Why fully digital banks? Fully digital banks can offer services at a lower cost than partially online banks due to lesser investment requirements and low fixed operating costs. Fully online banks often offer higher interest rates to its clients compared to traditional banks. Online banks often use the latest technology to offer advanced features such as mobile deposit, budgeting tools, and real-time alerts. They may also offer seamless integration with other financial services, such as investment accounts and credit cards. Online banking is generally considered to be safe and secure, with many banks using advanced encryption and multi-factor authentication to protect customer data. Customers can also monitor their accounts more closely and detect potential fraud or unauthorized transaction more quickly than with traditional banks. Thank you, sir.
So thank you, Mr. Moinuddin, for your concept paper. Yes, if we sum up the overall discussions, in fact, there are 4 points are very critical in the evolution of the digital bank. One is in the 60s, there is an evolution of the launching of the ATM, 80s internet, and in 90s there's a widespread use of the internet and digital banking services have been started. Following that, the cloud computing and the smartphone availability have expedited as well as created the need of the internet banking, e-banking, as well as the digital banking services. And having all the benefits have been discussed in the concept paper, we know that wide range of advantages with the help of the technology, we can capitalize the advantages of the digital bank concept to incorporate or to make the banking services reliable banking services, I must say, with the use of the technology to the marginal people as well. So today we are very delighted that to have the representation from the Nogod, that is Aminul Haq, who are working fantastically in the Bangladesh economy, giving wide range of services to the marginal people especially. And in that respect, how do you see the potentiality of the digital bank concept in Bangladesh to incorporate the wider range of people and bringing the services in an affordable cost to them?
Yeah. Okay. Thank you. Thank you very much. Thank you, Dr. Saim A. Mamoon, for your very nice organization of this program. And thanks to BDRL team members, all the team members who are there to organize such session. And thank you all the audiences who have listened to the concept paper. I was going through this concept paper very meticulously, and I was finding some of the topics are very crucial for us to know. And the time has come actually to understand how digital bank is going to impact our life. If you can remember, like few days back, a lot of people are talking about the open AI, the chat GPT. So now it has dramatically actually changed the entire horizon of digital marketing, the strategies, the way people used to think. Now chat GPT has changed the complete horizon of this entire industry in few sectors. So actually in near future, the way I can see digital bank, that means complete solution of digital bank, it might not be feasible within Bangladesh very short period of time, but the changes that we can perceive, there will be enormous changes. The way we are perceiving the financial sector, the way we are perceiving the financial services, the services that has been taken by us through the brick and mortar model, through the traditional branches. A lot of change actually. If you look around the nearby countries, like for example, if you look into Singapore, some of the banks of Singapore, like DBS Bank, even if you look into the other banks in Thailand, in Malaysia, they have adopted tremendous, I would like to say, the digital model to serve their customers in a better way. So first of all, I would like to say that Bangladesh, let's look into the Bangladesh as a country. Actually, what is our current situation? I was looking to the data, which is rightly, mentioned that a significant portion of the people actually still do not have any sort of formal account, formal bank account. So what is the problem? Like, why Nogod came into the picture to give such a tremendous drive for last 3 and 4 years where we're working? So first of all, the important findings is that Bangladesh, being a country where 90% of the transactions are still happening through cash method, I think is a very unique country, because we are having a GDP growth rate which is fantastic. We're having a reasonable inflation rate for last 5-6 years, which is also manageable. But the cash transaction portion compared to the entire GDP is still very, very high. So the problem that is faced by Bangladesh is that because the cash transaction rate is very high, we are unable to enjoy the money multiplier impact. That means the money movement impact. The money movement is too slow in Bangladesh that general people, the mass people, is not unable to enjoy the benefit of the money multiplier impact. Let me give you one example. For example, an SME businessman, he's having 1 million taka as his investment. So what he's doing, he is selling his entire product first, then physically going to his vendor from where he is purchasing the materials. Then he need to use the cash method to pay him by cash, which is also a risky method for him. He will top up his inventory, come back to his location, and then start selling. So if you think of a system where the moment his 50% of the inventory is sold, if he can digitally give an order for his materials and can make the payment digitally to his vendor, and then maybe a delivery can just come over and give him back the amount within like half of the day. So using his same capital, actually his ROI will be increased. He don't need additional investment. But because the moment, if they can somehow implement the just-in-time sort of model, it can be semi-just-in-time model, actually he can increase his ROI. His income will be higher. So his economic condition will be better. So from Nogod side, the digital transformation for which we are working is not just from the private company perspective that we are working for the sake of earning profit. That is not the objective. So the objective is that how we can allow our marginal people to enjoy the money multiplier impact. That means we want each and everyone to have an account, because we are not a bank at this moment, to at least have a wallet, because our Nogod has got the digital wallet, which serve almost like an account. You can do P2P, you can do merchant payment, you can pay your insurance payment, you can transfer money to your bank account, you can take money from your bank account to your wallet, you can pay your internet bills, education bills, everything that you can think about from the morning till the evening. Actually, you can, we almost cover almost everything. So if you have a wallet, I can guarantee you that all sort of payment service, most of the payment service actually you can perform without having any traditional method of payment. So now, because of those things, what is happening here? People are able to use those services at a very affordable cost. They're enjoying the money multiplier impact. And our core target is to minimize this cash transaction ratio from 90% to at least like 40 to 50%. Because if we can do that, statistically, it has been mentioned that for a developing country like Bangladesh, if we can reduce cash transaction ratio for 1% in the entire economy, the GDP positive growth rate will be at least 0.12%. So if you understand, for each 1% reduction, if the impact is 0.12%, if we can reduce by 40-50%, there'll be huge impact into the GDP growth rate. One of the classical example I just mentioned to you, how actually it helps, because it's going to make you like an automated system. You can reinvest your same amount of money because the faster money movement. So that is there's the evolution that is going to happen, inshallah, in Bangladesh, because we are going towards that direction. So at this moment, we have got already 7 crore customer base in our system. So if we consider like Bangladesh having an economy of 10 crore plus people, which are adult people, so we almost have like 70% of the adult population inside our system already. So how this is going to help the economy? The way it is going to help is that, number one, if you look at our strategy, our app transfer, P2P transfer is absolutely free. So right now I can say we are the only fintech company in Bangladesh. We kept the P2P free. The core reason is that we want people to start using the digital way of transferring money. So that's why in our app, we kept it absolutely free. And of course, considering the demand of the marginal people, we are the first company to introduce single digit cash out charge, which was 9.99%, 9.99 per 1,000 cash out charge, which was a almost like half of the cash out charge of the traditional way of cashing out in Bangladesh, almost half. So the core reason we reduced this cash out charge is that we found that those marginal people, each and every taka is very important for them. And because of that, for the last 3 years, total 1,000 crore taka plus as a cash out charge was saved for the marginal peoples. That means this money actually went back to the economy, because if they did not, if Nagad was not there, they will have to pay this money, and they'll have to pay to a particular company who would have just used that money either to give dividend or to spend that for the sake of the company's growth, not for the sake of the general people. So this is the amount, like 1,000 crore taka plus cash out charge that they saved is the amount. It went back to the economy actually, because this amount of money was saved by the marginal people. So they are humongously benefited because of our reduced cash out charge. And of course, Nagad, you will be happy to know that at this moment we have got more than 15 million government beneficiaries. Like government has got a lot of schemes. You know that we are in Bangladesh, approximately 1.2 crore students receive their student allowance from government through us. It's the cash allowance given to the students' parents that is disbursed through us every quarter. So the moment this disbursement is done, students' parents can buy their necessary products through Nagad. They can actually purchase their required products through Nagad. And apart from that, we are also disbursing a subsidy of the government for those which are like underprivileged peoples, and those peoples like widow, like crippled, semi-crippled peoples. So they are also getting benefited because of our service. And apart from this, actually, from the digital bank perspective, it is not going to be that much far that in Bangladesh, we hope and pray that we should be able to get a full-fledged digital financial institution like we can see in Singapore. From our side, I think our manpowers are extremely talented. We are all ready to adapt to the next phase of the financial sector, which is going to be the digital financial sector. I think we are all ready for it. So the moment it is going to start, I truly believe that the people of Bangladesh should be benefited. They will get the advantage of it. I think from the cost perspective, the way we can see the traditional banks cost structure, the amount of fees and charges that is borne by the customers, I truly believe that because of the cost optimization strategy in the digital financial sectors, those costs will be much more affordable for the general customers. That I truly believe. And for the infrastructure side, actually, our technically, we are all ready. We have the required technical knowledge because we have run our fintech company already, and we are running with 7 crore customer, which is 70 million plus customer base. We have done the required amount of R&D. We have gone through the learning curve. So we are all ready from our side to serve that segment actually.
Yeah, like your last statement, if we mention that, like the cost, the proponent of the digital bank always give emphasis on one of the first benefits. Do you think that a digital bank can ensure the like ensure the fund in the hand of the marginal people or the entrepreneurs, regardless of like any location, with a lower cost of the like fund? Will it be possible to due to
Yeah.
minimizing the cost or achieving the cost efficiency?
Yes, you see, your question is very relevant. Personally, I had the expertise to work with Bank Mandiri in Indonesia. So they were a complete traditional bank before 2015. So they started the digital transformation project during 2015, and now they have significantly digitalized most of their critical activities already. So I was in that project till 2019 before I joined Nogod. So I was the project director there for the digital transformation for Bank Mandiri Indonesia. So I found, and it is the data that I can tell because I was a project director. I'm going to share with you the data that is we can share without having the confidential issue. So I can see, I'm going to state with the number. The number is that it is feasible from that experience to optimize at least 10 to 14% of the OPEX if this can be done in a very systematic way. There's a methodology of doing that. So if we can really identify the areas where the cost can be optimized, I don't want to say minimize, it is all about optimization. If the cost can be optimized in a certain methodological way, it is feasible to optimize the OPEX cost 10 to 12%. Because first of all, you do not need significant amount of manpower, which is required by the traditional banks to serve the customer, because a lot of customer service will be done digitally completely. And then you will have the savings in the OPEX in terms of your rental cost for the branches, and then all the customer services that has been done manually, that cost will not be there. That is also a significant amount of cost for a bank. On the other hand, the advantage is that because the customer onboarding process will be done digitally, therefore a lot of customer acquisition cost will be minimized as well. The typical cost per customer acquisition that we can see for the banks, that will be significantly minimized. So you are going to minimize the customer acquisition cost. The operational cost will be minimized. So there is, I can't see any logic why this cost minimization impact should not go to the benefit to the customers. So definitely from the customer side, I strongly believe that if the portfolio can be managed properly and efficiently, the benefit should go to the customers. They should earn a higher return from the digital banks, of course. At the same time, their charges should be minimized because there's ample opportunity for cost optimization.
Yeah, this is an opportunity. When we are talking about opportunity, one of the critical aspects of for the entrepreneur in Bangladesh to have the challenge to access to the finance. So how do you see that like a full-fledged digital bank can expedite or can widen the opportunity for the entrepreneur to access to the finance?
It's a very good question. I really appreciate this question. You see, if you look into a lot of SMEs at this moment, like because of Nogod, a lot of like thousands of merchants are opening their merchant account through Nogod. So I always see the data, like how much is the payment that is happening. So you see a lot of SMEs and a lot of companies, those are good company, I would like to say. Their business is good, but the reflection into the financial statement is missing. Like they are not doing those transactions through bank or nor through merchant account of Nogod, bKash or other fintechs as well. They are doing it through cash. So that's why actually what is happening, the moment any bank or in future digital bank is going to assess that company, that what is the financial condition of the company, he will have to go through the financial transactions. So now what we are thinking is that through the digital banking system, we will encourage all the SMEs and all the entrepreneurs to do their transaction through the digital method. So what is going to happen is that if I see that how much is the credit amount in a month, and compared to that, because from our app you will be able to do everything, like all the bills, the utility bills that you are paying. For example, I can understand what is your at what time you are ordering for your coffee. I can understand at what time you are ordering for a certain particular amount of food, from which shop you are buying, what are the amounts that you are buying, what time you're ordering your coffee, and what time you're ordering your the top up amount, how much mobile bill that you are purchasing. So all these are actually indicators to me, indicators to us, that what is your profile. So the situation is not like a traditional bank where you will have the only business transaction in a bank statement. So I can see the reflection of the behavior, the financial behavior of that particular client is visible to me. So I can understand how much financial burden, how much liability will be optimal for him. And based on that, we will have this unique opportunity to see the behavioral aspect of financing. And based on that, we can go for even an alternative credit scoring to assess him apart from the traditional credit scoring that we have. And based on that, we can start giving him the digital loan, and based on the performance, we can also increase the limits, and the opportunity to increase the limit will be there as well. So just we need to make sure that from the regulator perspective and from the PPG perspective, those are aligned. I think this is the future, and it will be much more easier for us to assess the client. And it will be much more time efficient because most of the things should be done online. And the moment we have those documentation side through online, the moment we have data availability from the customer side, it will be much more efficient and easier for us to assess its credit worthiness and to disburse loan as well through the wallet. And those days, I believe that those days are coming. As you can see in Thailand, or the moment you go to any shop in Thailand, they offer you BNPL, buy now, pay later offer. Even you have the fund in your wallet. So those days are, I believe, that coming in Bangladesh within a very short period of time.
Yeah. We also hope so. My last curiosity, I think we have in fact, our audience have a lot of curiosity. I believe that, and we are lucky to have you. That my last curiosity to you, that like, how do you then predict the future of that traditional branch-based banking in Bangladesh?
Oh, it's a very important question. Actually, branch banking will be there. It will remain there always. So you need to understand one thing, that from the fintech company perspective or digital perspective, a certain segment of customer can be catered. But if you look into the corporate banking side, because at the end of the day, for Nagad as well, or Bikash or some other fintech companies that we're operating, at the end of the day, we are serving the customers, but the settlement is happening through a bank. So those funds need to be kept in one of the banks. Actually, to me, this is more efficient as well, because for a lot of banks, it is not financially feasible to open a branch in a very remote area where the number of people, the capable people who can maintain an account and then give the fees, it is not financially feasible for a bank to open branches in the remote areas. On the other hand, what we are doing is that we are going to those remote areas, serving those customers and collecting those money. But at the end of the day, those funds is kept in a bank. So I think the banks and the digital financial institutions like fintechs, it will still coexist. But I think the direction will be for retail customer segment, it will go to more towards in the fintech sector. But the corporate banking, it will be more towards the traditional banks. I think that will be the future mostly.
Okay, thank you, Mr. Aminul Haq. So in that case, like, is there any question from the panelists or other participants? You can raise your hand, please. Himadri, would you like to add anything, or if you want to make any comments?
Yes. So one question that I have is, and this is more the experience of UAE. So as you would know, UAE has started granting digital banking licenses in the country, and they are being set up as we speak. Of course, digital banking does not have the distribution reach of traditional banks, with the branches and things like those. So what kind of challenges could be there in terms of collecting deposits, which is so important for banks? So are digital banks going to have a different mechanism of collecting deposits, or is it expected that people naturally will deposit in digital banks like they do with traditional ones?
Okay. So if you consider this situation for Bangladesh, I don't think immediately like all the customers will be depositing money directly through digital bank. I don't think so. That's going to happen because the digital adaptation needs some time. If you look into our situation, actually, we had to invest a lot of time, energy, and money to educate the customers. Even the same example I can tell you for the Bank Mandir as well, because there was even a title called educator. Like they used to deploy the educator. Yes, they saved money in terms of because they can get rid of some of the branch people there, but they had to deploy the educators who used to teach the customers how to do the online transactions in front of the branches initially, and then slowly the customers adaptation has been done, and then customers can do the transactions by themselves. So the same situation I think is going to happen for a country like Bangladesh as well. Like initially, yes, a certain segment of customers like you and me, we might directly go for the digital adaptation, but the other customers have to go through a learning curve, and it is going to take some time, I think, initially, and only then we'll be able to see a certain number of customers in the digital platform. So we'll have to do the same thing, I think.
Oh, thank you.
Yeah.
I agree.
Yeah, so thank you. Thank you, Imadri. Any other questions or comments from anyone?
Thank you, sir.
Yeah, Ashish, we can hear you. Yes, you can.
Sir, I'm Ashish Kumar Ghosh, First Assistant Vice President, BDRL. My question to Muhammad Aminul Haq, sir, that do your organization have any plan to open any mass payment gateway like Paytm or other payment system, and what are the potential or problem you think to implement such systems?
Are you
Is it clear?
referring to? Sorry, can you repeat the question again?
My question is that do you have any plan to open any mass payment gateway like Paytm in India, where anyone can pay any amount without any opening any account, like Paytm or Google Pay? Do you have any plan, or what are the possible potentials or problems in this system?
Oh, okay, are you referring to the payment gateway, right? So actually,
Yeah.
if you know that at this moment, actually, a lot of merchants are already in our ecosystem at this moment, but you have to pay it like either you have it through the QR code payment you can do already, or as at the same time we have got a lot of merchants which are connected through SSL e-commerce as well. But you can also pay through Nogod as well in there, and some of those e-commerce are directly connected as well. But direct connection needs some time. That's why it is gonna take some time to cover the entire like online community. So yes, of course, we have that plan actually, like the Paytm that you mentioned, that we have also a bigger plan like you see in India, like almost all the small merchants that you see on the street, you can actually pay through Paytm. So similar sort of plan also we have got, but it is going to be like a phased plan for us, because in Bangladesh we need to also understand the customers' adaptability. So the moment we think the customer base is actually ready to adapt to this, we will definitely go for it. We are very aggressive, that you can see from our marketing plan and from our strategy. Because of our aggressiveness, actually within 3.5 years, we have gone through this long journey within a very short period of time. But we are also, that is in our plan, of course. Ashish, is it okay for you?
Okay, thank you. Yeah. Thank you.
Okay, thank you, Ashish. So I think we are out of our scheduled time. So if we wrap up our discussion, that the main proposition we had for today's discussion is that like our traditional banking systems are coming up with the different digital banking services, along with our mobile financial servicing and fintech companies are also emerging in a context where a good number of people still engage in the informal economic activities, and their statistics also shows that half of the people still are out of like formal banking services. So the major concern is that what is the solution? Yes, the traditional banks are trying to the way, and few of the services, fintechs also coming up with their like effort to connect them. But as a whole, still a large number of population are out of the mainstream banking services. Then the question is that will full-fledged digital bank can ensure the services to the marginal people and all like cluster of the population. And if we can do that, then our economic growth will get another like dynamism, and the inclusiveness of the economy will be expedited. So considering these all sort of questions, so we organize this program, and we are from BDL perspective, we are also conducting continuous researches on this particular area. As yes, the one issues also came that alternative credit scoring. BDL is a very like specialized in this respect of assessing the credit rating and developing the credit score with the like global experience as a DNB company. So in that respects, we are very delighted to know that Nagad is also coming up with such type of like alternative credit score development. Definitely in coming days, we may exchange our ideas and thoughts in this respect. And again, thank you, Mohammad Aminul Haq, for your participation and sharing your very rich inputs. I believe that all the participants have been enlightened and got some important insights from your observations as well as an experience. We are really grateful to you and sharing your like ideas as well as the experiences. And special thank Himadri. I know that we all know, in fact, that you are very busy and engaged. In spite of that, your presence was very encouraging and like inspiring for all of us and for all of our participants and all of my colleagues here and all the participants across the Bangladesh. I can see that some people also coming from outside of the Dhaka. So we are very happy for your inspiration, and we will continue as a BDRL, will continue its effort. Our main purpose to provide our like credit rating and other advisory services to develop the market and to drive the market so that like market as a whole can get our due services in a credible way. So with these few words, again, thank you very much to everyone.
Thank
Good
you.
night.
Thank you.
Thank you.